Tesla just had a brutal sell off this week, but I am still bullish under a few key conditions. And in this video, we're going to talk about the current setup, where I think Tesla is headed, my exact stop loss level, and what needs to happen for this breakout to actually happen. Now, if you want access to all of the indicators that you see here in this video and learn the strategy that we're going to go over in depth, the link to our free course library will be down in the description. I recommend starting with Smart Money Mastery, which will help with structure, and also the Elite Traders Playbook, which will show you the indicators we have set up. If you are new to trading with us, we became bullish on Tesla back here in June of 2024. The reason for this is price was no longer making lower highs and lower lows, and structure had broke. This previous resistance of $200 was taken out, and this means now that we're looking for this breakout to an equal high. Once price breaks structure, we know that a retest of support is going to happen. This is where we look for our institutional buy zone and our smart money zone. Like I said, go take the free course showing you how to set these up and draw these on your own. It's less than 30 minutes so that you can get an idea of exactly where to be putting these levels. But you'll see that price pulls right back into this smart money zone here at $191. And if we were to actually back things up here, you'll see that this is that institutional buying zone back in August. And what we want to see is the daily BX begin to make higher lows. And that is the indication right here for us to go long. This is how we can use a smaller time frame, such as the daily, to hunt for potential entry points. This is going to be important as we go into this current setup. From here, we would look to set a stop loss at lower lows at $178. And obviously this trade broke out to absolute perfection. You could have done the same thing back here in October when price pulls into that institutional buy zone. We would have went down to the daily and would have caught an entry right around $220. And if you guys remember, this is the breakout that we played on Tesla basically from October, November into December. But since December 30th, I have removed my bullish stance on Tesla. And honestly, I probably should have been shorting at that time, but I didn't. My point was that I wanted to wait for price to pull back into more of a discounted zone. You'll notice that the BX trender started making lower highs, and then the RSI actually crossed down. This is an indication that we are most likely going to continue to sell off. Now, there are two areas that we look for price to actually sell off to. The first area is going to be the market bias. That's why I became bullish on this last week. And we did the same exact thing that we just talked about in that prior example. We knew that we were pulling into a support level. So we went to the daily chart, waited for higher lows, and then became bullish on Tesla right around $345. I was expecting this push to continue at least to $375 to $380 before a potential rejection, but with the entire market selling off today, Tesla folded with it. Now, for those of you who are students in my private Discord community, you know that this is what we actually want, because we only went in with 20% of our leap calls between $300 and $40, because as we said before, when price normally finds a bottom, we're not just going to break out. We have to stop making lower highs and lower lows, and now hopefully begin to make higher lows right here within this smart money zone up into higher highs. That would give us a break of structure, and that would actually indicate the bottom. And that's why today I decided to add more exposure to my calls on Tesla. I originally got $350 calls expiring December of 2026, and I decided instead of averaging down on those, because my stop loss from right here is only 4 to 5%, that instead I would go with a shorter time frame. And so I decided to pick up 20 June 20th, 2025, $330 call options. You'll see that on the 1 hour, once we broke that liquidity zone that we were talking about on X, price started to sell off into our institutional buy and smart money zone. Now, very quickly, the way that we find that is by taking our Fibonacci from swing low up to swing high, and the 0.68 to the 0.726 is that institutional buy range, with the 0.83 being the smart money range. That course will show you how to set all of that up. But this is very important because this smart money range and this institutional buy range are going to be the lowest that institutions are going to push this to before they decide to step in and save the overall trend. This is why this is normally the optimal time to enter, because if price breaks into lower lows, you end up taking a loss here about 3.5 to 4%. Just up to higher highs is about 11%, which is a 3-to-1 risk versus reward ratio. Now let's zoom back out for a second, because if that lower high were to hold and the daily were to stay green on this BX trender, which indicates buying pressure, then there's a very good chance that not only will we push into higher highs, but fill this gap up to $400. So this now makes our trade potential 5-to-1 risk versus reward ratio, and we don't need anything more than a 50% win rate with something that cracked. And I want you to understand that even with that breakout, that would only be back to major resistance levels. So we could actually snipe about a 20% move to the upside, find a potential rejection, and then play that next leg up. But I think that where we are right now on Tesla is more than worth it for me to be taking a position long. And worse comes to worse, if price ends up breaking through $323 to $320 and I end up losing an extra 4%, then so what? That's even better for us. It sucks because we lose money in the short term, but we don't care about that. If there's one thing that I've taught you guys is that it's okay to be wrong as long as you're getting paid way more when you're right than when you are wrong. This year, we're only have a 61% win rate. And so if we end up losing, it's not a big deal. This just means that price will actually sell back off to $280, worst case $260, and we can try again from there. Once again, looking for our potential entry, taking profit at equal high, setting stop loss at lower low, giving us another 8-to-1 risk versus reward ratio. And for those of you who are OGs here, you know that the same exact thing happened back here in July. We tried to time the daily market bias and price broke right through, took a small loss, waited for price to pull back down to 185, and then sniped the living crap out of it with call options. So at the end of the day, the risk versus reward is more than fine here. If we end up breaking support, then we'll just watch this flush down to $280 and go focus on something else. But at the end of the day, I'm not worried. Number one, because I don't care if I'm right or wrong. And number two, because I never put myself financially in a position where any trade is going to make or break me. Because if any trade is going to make or break you, then it means you're trading with too much size relative to your fund. And that is not right, whether you make money or lose money, because eventually you're going to get caught. At the end of the day, the most important thing for all of us is to protect our capital. Thanks for all the support, guys. I'll see you next time. Check out the courses. If you want to join our private Discord community, get access to all of my real-time trade alerts, learn my exact strategy, and get access to all of our private indicators, then join the Discord community. Link in the